Welcome to The Explainer. Today, we're diving into the mind of Michael Saylor, the guy who basically turned his company MicroStrategy into a Bitcoin powerhouse. We're going to try to understand his pretty complex and maybe revolutionary financial strategy. Okay, let's just zero in on this quote for a second because it's everything. Saylor's whole game plan, it just boils down to this one powerful idea. Bitcoin isn't just something you hold onto, it's something you build with. He doesn't just see digital gold, he sees it as the foundation for the next generation of finance. You see, he's not just buying Bitcoin. He's pioneering a whole new kind of business model that he calls the Bitcoin Treasury Company. And this is a massive shift, right? It's about changing how you think about a company's treasury from just a boring old savings account into a dynamic engine for creating brand new things. So, what's the mission? It's all about engineering. The goal is to take this raw digital capital, Bitcoin, with all its famous volatility, and basically refine it, turn it into something predictable, stable, and actually useful for the more traditional financial world. It's a new asset class for a new century. And this new asset class, this is what Saylor calls digital credit. That's the core of his whole vision. I mean, think about it. For 100 years, we've had things like bank credit, corporate credit, sovereign credit. Saylor is basically arguing that digital credit is the next big step in that evolution, built on a whole new set of rails. Okay, but how? How on earth do you take an asset that's famous for its wild price swings, like Bitcoin, and somehow create stable credit from it? Well, that's where the engineering part really comes in. Saylor has this fantastic analogy for it. He says, think of it like taking a barrel of volatile crude oil and extracting stable jet fuel. You start with the raw commodity, right? That's your Bitcoin. Then the process begins. You strip away the risk, you distill it into a specific currency, like the US dollar, then you engineer a specific yield, let's say 10%, and you set a specific time frame. The thing you end up with is totally different from what you started with. All right, I know what you're probably thinking. Isn't that incredibly risky? I mean, come on, we're talking about Bitcoin's price swings here. Anytime you're creating credit, you have to talk about collateral and safety. And Saylor's claim is that his entire model is built on a massive safety cushion. And to really get his approach to risk, you have to wrap your head around the sheer scale of their collateral. At the time he was talking about this, MicroStrategy was sitting on $74 billion worth of Bitcoin. That's the foundation of everything. Now hold that 74 billion number in your head and compare it to this, their outstanding debt. They've only created about $6 billion in these credit instruments against all that collateral. This is exactly why Saylor says his company is so way over-collateralized. He argues the risk of them ever defaulting is just incredibly low. And listen, this isn't just some theory on a whiteboard. They're actually doing it. They've already launched distinct product lines based on this whole model. Take their Stretch product, for example. It's basically a high-yield instrument they built for certain institutional investors. It's real-world proof that this whole distillation idea can be used to create all kinds of financial tools. What's really interesting is that this whole strategy also gives Saylor a super clear answer to one of the biggest, longest-running debates in the crypto world. Is Bitcoin supposed to be a currency for buying coffee, or is it a long-term store of value? For Saylor, there's no debate at all. In his mind, the two don't even compete with each other. They're doing two totally different jobs in this new digital economy. He sees Bitcoin as digital capital, that scarce, long-term asset. And the role of digital currency, this stuff you use for day-to-day transactions, well, that's being filled by stablecoins, which are really just dollars on a new set of rails. As he perfectly puts it, you use a stablecoin to pay for coffee, but you give your granddaughter a Bitcoin. So if this is the digital credit engine, what's next? Where does this all go from here? Well, Saylor sees a massive global opportunity, and the plan is to scale this whole model way beyond just the US dollar. The playbook from here is all about global expansion. The goal is pretty straightforward. Take the same model that's working with the dollar and just replicate it for the world's other major currencies. Create similar high-yield products denominated in euros, yen, pounds, you name it. And really, this quote gets right to the heart of the ultimate vision. It's about using Bitcoin's massive capital base to offer high-yield financial products that pretty much anyone on the planet could access. The big idea is to give people all over the world access to the kind of yields that have usually been reserved for the most sophisticated investors, all derived from the Bitcoin network. So when you step back and look at the whole picture, The key takeaway here is that this is so much more than just a big bet on Bitcoin's price going up. It's actually a blueprint for a brand new kind of financial institution, one that uses a decentralized digital commodity as its core capital, which it leaves us with a final, really provocative thought. Now that the blueprint is out there, how many other companies are going to start building from it?